Hi again. Now we're going to continue on the supply chain cost, and we're going to focus on more details about inventory cost. Inventory cost refers to the expense a company pays to hold finished or partially finished products, such as raw material or supplies needed to support the business function of providing the ultimate value for their customers. Inventory costs include expenses paid to maintain the warehouse building, labor cost, and estimated risk of loss, damage, or stolen material. Holding inventory helps organization meet the demand during regular times, certain season, or uncertain time. There are different types of inventory considered in the inventory to manage the inventory, such as the raw material, work in progress, finished products, return goods, in transit and distribution, and maintenance, repair, and operations supplies. Now, we did talk about the different types of these inventories, and just a summary for these, inventory cost will be three items: ordering cost, carrying cost, and stock out cost. Including the item cost, of course, this is what you paid for the item. Carrying cost is the cost for holding inventory, such as the storage cost, the risk for stolen, lost, damage. Ordering cost would be set up, tear down. Purchasing cost were preparation, follow up, receiving, authorizing, payment, etc. Stock out will be the loss of sales and possibility loss of customers. So how we could write all these inventory costs in equations and be able to use them to manage our inventory? The total cost for inventory would be the annual holding cost plus the annual ordering cost. Inventory, again, ordering plus carrying plus the stock out. We assume that there's no stock out is considered here. So we're going to use just these two items, ordering cost plus the carrying cost. The carrying cost would be the order quantity divided by 2 times the cost per unit times the percentage of the carrying cost. For the ordering cost would be the annual demand divided by the order quantity times the order cost. Let's take a look into this example and see how we could apply this example. Suppose that you are a supply chain manager for a local company. You are asked to calculate the annual ordering cost, the annual carrying cost, total annual cost. And the accountancy department provides you with the following information to conduct your analysis. The annual demand is 10,000 units, ordering cost is 30 per order, carrying cost is 20%, and the unit cost is $15. Assume that there's no cost for stock out, and the order quantity is 600 units. In order to find out the total cost, we have to find the ordering cost and the carrying cost, and then we will add them together. Let's take a look into how we could answer this question. The annual cost would be the annual demand of 10,000 units divided by the order quantity, which is 600, times $30. That would be equal to $500 as an annual ordering cost. For part B, which is the annual carrying cost, will be by the order quantity divided by 2 times the cost per unit, which is $15, times the percentage, which is 20%. That would give you a 19. That would be $900 as a $900 as the carrying cost. Now the total cost would be 500 plus 900, which would be equal to 1,400. All right, now moving into another concept, we did talk about the inventory turns. So, and we took an example on that, so we should be okay. Now here's another example that will help you understand the total inventory cost. For example, given the following annual cost, calculate the average cost for placing one order. We have a production control salaries to be 60,000 per year. Supplies and operations expenses for production control department 15,000 per year. Cost for setting up work centers would be $120 per order. Order placed each year is 2,000 orders per year. The average cost, or would be the total cost actually, the fixed cost divided by the number of orders plus the variable cost per order. So the fixed cost would be 60,000. This is, we have to pay it no matter what. Plus also we have another 15,000 in terms of supplies. So 60 plus 15 divided by 2,000 orders because we have 2,000 orders, plus the 120 that we have to pay for each order. So the cost per order would be 157.5. Now, if we need to find the total cost for all of these 2,000 orders, you multiply 2,000 times the 157 to find out what would be the total cost for that order. All right, now moving into carrying cost example, let's see how we could find the carrying cost. A company carries an average annual inventory of $2 million if estimated cost of capital 10%, storage cost 7%, and risk cost is 6%. What does it cost per year to carry in inventory? So the carrying inventory will be the capital cost, the storage cost, and the risk cost. These are the three. So 10% plus 7% plus 6%, 23% is the total carrying cost, which would be 23% of the 2,460,000 would be the carrying cost for the 2 million inventory. All right, so I hope this is helpful. We just basically reviewed a few concepts with you on the inventory management, including the carrying cost, including the inventory turns, and also we did talk about the ordering cost and their carrying cost. Now we're going to move to a new concept, which is the economic order quantity, which is also an advanced topic, an advanced concept that we will use it to minimize the cost. But I'm going to leave it to another video, so I'll see you in another video.